Cracks are beginning to show in the banking system as all of the big banks release poor earnings. And Donald Trump is coming after one of their biggest profit centers, credit cards. And like always, the big banks are too big to fail. Since June 30th of last year, the Fed has provided $420 billion in bailout dollars to the banks. Meanwhile, none of us are getting paid on our deposits, which they're earning 5% on. And this is why stablecoins are a threat to Jamie Dimon and JP Morgan, to Brian Moynihan and the Bank of America. Stablecoins are going to wipe out $6 trillion in value from the banking system.
Tried to make, and if you look at some studies I think were done by Treasury, is that they say you can see upwards of $6 trillion in deposits flow, off the liabilities of a banking system to the as the deposits into the stablecoin environment.
So what did they do? Well, they tapped Senator Warren and the other paid politicians to sabotage the market structure bill. There were 38 amendments issued to the market structure bill just a day before their Senate Banking Committee. And Coinbase CEO Brian Armstrong wasn't having it. Coinbase pulled their favor and their support from the bill, basically torpedoing the underhanded plan of Senator Warren and the paid politicians. Today, I'm going to take us on the inside of this battle happening in Washington. I'm going to bring you even audio clips of the executives of these banks saying why stablecoins is a major threat to their business. And I'm also going to show you that they're not hiding the fact that they're paying trade groups in order to lobby for legislation in their favor. Gosh, our system is so corrupt, and that's why we need a new one. Let's look at why they're so afraid of stablecoins and of Bitcoin. This is Dante Cook with Bitcoin Simply. Let's go. I've got a few massive stories that are dropping today that no one else is talking about. Since June 30th of last year, the Fed has issued over $420 billion to the large banks in the name of the Troubled Asset Relief Program, or we know that as TARP. Yeah, the bailout program from the financial crisis in 2008 that was created to provide an unlimited backstop to the big banks. Oh yeah, and the $420 billion that have been issued to the big banks since June 30th of last year, well, that's 60% of the total amount that was issued to bail out the entire system in 2008. And the crazy part is they're getting paid 4 and 5%. But yet, a study revealed that they're only paying Americans an average of 0.14% in interest. So wait, they're holding our deposits, getting bailed out with our money, and making money on the money that we're giving them on both sides. And we're not getting any of it. Make it make sense. Right. It's all about power, access, and control. And the profit centers of the banks are being attacked from all sides right now. Let's look at mortgages, where they can create money out of thin air and earn interest of 7% from you and me on a monthly basis. Well, annual home sales have fallen for 3 straight years. As few homes were bought in 2025 as 1995. Major attack on their profits. Meanwhile, Donald Trump is coming after their second largest profit center, which is credit cards, where he's saying that he wants to put a cap on credit card interest rates at 10%. And another profit center, probably their biggest profit center, is bank deposits and fractional reserve banking, where they can hold your money, your deposits, lend them out without actually having to account for them and earn money on it. And this is why they're so afraid of stablecoins and crypto at large. One of the big bills that were supposed to be coming out that was highly anticipated from SEC Chair Paul Atkins and others was the market structure bill, where there would be clear and finite regulation for the approval and the rollout of stablecoins and crypto through the financial system, which was going to make the United States the global capital leader in this area. And yesterday, some turn of events happened. Coinbase CEO Brian Armstrong said that he is not in favor of the new amendments and bills. Oh yeah, that's because 38 amendments were filed just a day before from Senator Warren and her paid politicians and goons to sabotage all the work that Senator Lummis and other people have put in over the past several years on these sorts of bills to make America the leader in this sort of innovation. Let me give you a couple of them. A ban on tokenized equities, government getting access to all of your financial records, removing the crypto industry from the CFTC or the Commodities Exchange and leaders to the SEC, the financial markets which are controlled by the big banks. And they're also killing rewards on stablecoins, effectively limiting Coinbase and others who are trying to get into this game through the stablecoin path.
Well, I think the high-level principle here is that we can't really have banks come in and try to kill their competition at the expense of the American consumer, right? People in America should be able to earn more money on their money. I think stablecoins are an opportunity for banks. They should be able to build great product lines with this. It's an opportunity for crypto companies. Congress and the laws that get passed, they should really create a level playing field and say, this is allowed, this is not allowed. Now, all American companies, go compete, try to build the best products and services. That's great. What's not great is if the banks can put their thumb on the scale to try to kill some of their competition, and they only pay about, 14 basis points on the average savings account. Consumers should be able to earn 3.8% on their stablecoin rewards. And so we're going to keep fighting for our customers' rights and the 52 million Americans who use crypto every day.
I mean, what would you say to the argument that banks have put forward that because of the role they play in the economy, the loans that they make, if they do wind up seeing billions of dollars, as some have estimated would happen going from banks to stablecoin, they say that could have a big impact on the economy. What's your response to that?
Yeah, well, banks don't have a monopoly on lending money. Actually, crypto is doing quite well in this area as well, and crypto is a technology to update all parts of the financial system, whether it's lending, capital formation, et cetera. So I think banks do play an important role in the economy and making these loans. Crypto should be allowed to do similar types of activity. We're not engaged in fractional reserve lending. That's an important point, by the way, because the bank license, what that really allows you to do is fractional reserve. The banks don't have all of your money there. That's why there's so much oversight and you can have these runs on the bank. Stablecoins have 100% reserve, right? And they're all the assets now post-Genius are held in this short-term US Treasuries. So in my view, it's actually a safer place to store your money, and crypto companies should be allowed to compete and offer loans just like banks.
And why are bankers so scared? Well, here's the real fire. I did some digging, bringing you straight alpha, listening to the actual earnings calls from executives from JP Morgan and Bank of America who talk about exactly why they're afraid of stablecoins and what they're doing in order to stop it. Here's some clips from JP Morgan's earning calls.
It certainly makes our lives much easier from a modeling standpoint. I know that it appeared, at least in the 8K, that there was a small stub of tax advantage investments where you didn't adjust the treatment. So I wanted to just understand if that 20% tax rate is expected to hold going forward beyond 2026, or if there's any potential for very modest but still a little bit of upward drift as earnings continue to ramp.
For now, I'd use the 20. But obviously, hence there are a small number of deals that don't qualify for the treatment. Now, over time, all of those are going to burn down and the effective tax rate drifts up. But we'll be able to give you more guidance on that as we go through the various years.
That's great. Thanks so much for taking my questions.
Thank you. We'll now move on to Gerard Cassidy with RBC. Your line is now open.
Hi, Brian. Hi, Alistair.
It's interesting. Getting rid of stablecoins is at the core of their advocacy. But what advocacy are they talking about? Who's advocating? Right, paying off politicians like the mob. They say they will compete, but stablecoins offer a potential threat to the system that aren't regulated in the same way that they are, aka regulated in the rules that we get to write. But Brian Moynihan, CEO of Bank of America, says the quiet part out loud.
And if you look at some studies I think were done by Treasury, is that they say you could see upwards of $6 trillion in deposits flow, off the liabilities of a banking system to the, as the deposits into the stablecoin environment. So when you think about that, that takes lending capacity out of the system, and that is the bigger concern that we've all expressed to Congress as they think about this, is that if you move it outside the system, you'll reduce lending capacity of banks. That it particularly hurts small, medium-sized businesses because they're largely lent to end consumers by the banking industry, where capital markets-oriented companies go off into the market. So I think, in the end of the day, at the margin, the industry, gets loaned up, and if you take out deposits, they're either not going to be able to loan, or they're going to have to get wholesale funding, and that wholesale funding will come at a cost that will increase the cost of borrowing. And so that's the issue that people have to struggle about.
Stablecoins are going to drain liquidity from the banking system. $6 trillion worth. That's right, $6 trillion is going to flow out of the banking system and remove lending capacity, which he's going to say is going to be a threat to small and medium-sized businesses, as if small and medium-sized businesses can't go to other places in exchanges to borrow the same money. But here's the scary part. They're saying their playbook out loud.
But I think in the industry overall, I think it's something that we've expressed concern as an industry, and we continue to make sure that they see those issues as our trade groups and others, as they work through the final legislation. What will come out of it, I don't know. in terms of adjustments or thoughts about that, and are working on it as we speak.
And now we know what those trade groups are working on as we speak to funnel legislation through the proper paths to advocate on their behalf, not the behalf of the consumer, not the behalf of the individual, which is us. So rumors are started that they're saying that they might be able to come to a deal if they can agree on the yield part of the market structure bill. But we know why that is. Because it disrupts their entire profit center. And this is why we Bitcoin. This is why we want to see stablecoins come out. Before we go any further, let's go to a Bitcoin lender that is proving that you don't need the banks today. Ledn, the leader in Bitcoin-backed loans, which allows you to borrow against your Bitcoin without selling it. They allow you to issue over-collateralized loans, meaning a 2-to-1 value of if I want to borrow $500 in fiat while I post $1,000 in Bitcoin collateral. The process is so simple and so fast. There are no credit checks because it's either you have the Bitcoin or you don't. And the fiat gets in your account in less than 6 hours. This is completely transformative and disruptive to the banking system. Oh, and unlike fractional reserves, you can actually see where your Bitcoin is by just looking at the address in the wallet. This is why they have over 1,000 5-star customer reviews. This is why the process is so seamless, simple, and fast, and it takes just 2 minutes to get started. Go to learn.ledn.io to get 0.25% off your first loan. We got you hooked up. You don't need to go through the big banks. And one of the ways you can remove power from the big banks is by removing your Bitcoin from their platform. One of the ways that you can do that is by hiring a coach so that you can do that privately, safely, securely, and confidently. Work with the team at the Bitcoin Way to schedule a free 30-minute consultation, and their team will walk you through step-by-step how to remove power from JP Morgan, Jamie Dimon, Brian Moynihan, Bank of America, and all of the banks in general. Go to thebitcoinway.com/simplybitcoin to get started.
And the reason they're threatened by the stablecoins is if you open a bank account today, they're supposed to pay you interest because they're holding your money. And what they're doing with your money is they're lending you that money out. Back in the day, you used to actually get paid for that. Now, you still technically get paid, but the interest rate is like 0.01%. Have you guys looked at your bank account and it's like there's like one statement every month that says an interest payment, it's like 5 cents or something like that? They're worried because what they think is going to happen is, and this is how, by the way, a lot of the stablecoin providers, this is how they make the money that they do, right? They get paid interest, right? That's how they make money, right? They buy US dollar equivalents like US treasuries, and they get paid interest for that. So if you were competing against the banking system, what would happen, and credit card companies, what would happen if all of a sudden you said, wait a second, instead of us just collecting this 4%, let's actually give 1% back to anybody who's using this stablecoin. And now all of a sudden, right, that stablecoin is a lot easier to use than a bank account. It's paying you interest. There's no friction when you're sending a wire overseas. It's instantaneous settlement, like anywhere around the world. You essentially are able to send dollars instantaneously worldwide. You could take custody of those dollars themselves. You don't even need a bank account technically. So what did the big banks do? They knocked on the door in Washington and they said, no, you can't do this.
The reason they're trying to sabotage and to completely disrupt the stablecoin industry, because stablecoins have built a better product, built on a better business model with better technology that's more available to more people across the world without needing bank branches in order to get off the ground. They provided utility for people in all sorts of countries and places that had debasing currencies and rapid inflation where they had to store their money and their value in dollars. Their systems are backed one-to-one, unlike the banking system, and this is why this is such a threat. They're giving back to the people what's rightfully theirs. And here's another reason why I think that people are so afraid of Bitcoin and stablecoins in general. It's because it disrupts the inner circle of how power actually works in the world.
There's about 150 people that run the world. Anybody who wants to go into politics, they're all puppets, okay? There are 150, and they're all men, that run the world, period, full stop. They control most of the important assets. They control the money flows. And these are not the tech entrepreneurs. Now, they are going to get rolled over the next 5 to 10 years by the people that are really underneath pulling the strings. And when you get behind the curtain and see how that world works, what you realize is it is unfairly set up for them and their progeny. Now, I'm not going to say that that's something that we can rip apart, but first order of business is I want to break through and be at that table. That's the first order of business. And the way that I do that is by proving that I can do what they do as well as they do it. And then do it better than how they do it. Because at the end of the day, they are commercial animals. Okay? And they'll open the door out of curiosity and they'll let me stay because I add value. And then once I'm there, I can open the door for other people who can try to do the same thing. So my entire goal now is to be in a position to aggregate enough of the capital of the world to then reallocate it against my worldview.
You know who's one of those 150 people that you and me aren't? Well, Brian Moynihan, Jamie Dimon, Larry Fink. These are the people that are in the inner circle that want to keep their inner circle small for them, for their family, for their bloodlines, for their generations. And that's why Bitcoin is a threat. Because if Bitcoin is allowed to run, if stablecoins are allowed to run, well, this disrupts their system and their profit center. And this is a threat. This is going to bring a whole new set of people to become the most rich people in the world that are going to rewrite the rules based on their beliefs and their systems. Fair trade, fair policies, transparency, no backdoor deals, things being done in the open, democratization, access and ability for everyone across the world. There's going to be some major battles, and I believe the frontier for the battles that are going to happen in 2026 are going to be from a regulatory standpoint. The existing system versus the new system. The question is, are you going to be willing to ride out that sort of volatility? Because it's not going to come without some collapses and some calamity. And that's why we advocate that you subscribe to the channel, so you know exactly what's happening and you can be prepared. One of the ways you can continue to be prepared is by stacking sats consistently, not worrying about the news, the cycle. One of the ways you can do that is by stacking sats through Bitcoin mining, not setting up a mining rig and machine in your own house, but actually buying it through a company like SAS Mining, where they're going to help you to mine the Bitcoin on your own. Well, they're going to help you to mine the Bitcoin through their hosted facilities with 100% carbon-free renewable energy. And there's no markups, there's no middleman. Sats flowing straight directly to your wallet. Get started today by going to the QR code listed on the screen and working with SAS Mining. This is Dante Cook with Bitcoin Simply. Happy stacking.